Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets give up early gains to trade in the red now. The Nifty is trading below the mark of 12,250. Broader markets too are off the day's high. The volatility index has snapped a 4-day losing streak. The index is back above the mark of 11. The PSU banking index is the top sectoral loser, while all constituents are trading with losses. And Gateway Distriparks gains the most in almost 4 months after the deal of selling 40% stake in Snowman Logistics to Adani Logistics. Good afternoon, Neeraj. Profit booking at higher levels, considering it's a thinly traded day as well. 12,300 continues to be a big resistance. Yeah, it does. And multiple people have spoken about it as well. But you would have to say that it's not a terrible performance by our markets. We are lying flat. In fact, the BSE small cap index, unless I'm very wrong, at least the last time I checked about half an hour ago, was doing okay. So maybe, just maybe, select broader market names could be doing okay, despite the fact that the Nifty is doing what it is doing. They're about 0.5% higher. And the market breadth should come up on your screen that even on a day like this, wherein we've seen some bit of chipping off from the higher levels, the breadth is still positive and in favor of the advances. But get the heat map up on the screen first and talk about the Nifty 50 names, and let's see what's happened there. Still almost even Stevens, but look at the gainers. Tata Motors 2.5%, Sun Pharma, Bharti about 1.5%. A fairly diverse set because there is a Nestle out there, and then within the banking names, IndusInd is amongst the best performing banking stock on the Nifty today. We don't have the HDFCs and the ICICIs at the top draw. HDFC Bank, in fact, is just up about 0.5%, so no big gains. Kotak Bank too marginally higher in trade, about 0.25%. So the biggies aren't there, but a diverse set of names moving up. Autos by and large seem to be doing okay. What's not doing well? State Bank of India corrects another percent. Lots of rumors surrounding this. The management has denied any weak bank, private or otherwise, being merged into it, but the market probably working with that belief. Infosys is down about 1%, Hindalco down about 1.5%, and Axis Bank, on which there were a stupendous number of long calls given between Friday and today, is down about 1%. Very quickly, the broader end of the spectrum, just want to mark what's happening in the mid-cap and the small-cap indices as well. There's strength in Indiabulls Ventures, Syngene, Aditya Birla Capital gains about 3%. So capital markets linked stocks did well in Friday, are reasonably selectively are doing well in today's session too. What is not doing well, Aditya Birla Fashion and Bank of India are amongst the losers. Godrej Properties is down about 2% in trade. There's a small cap index and just one large stock, Gateway Distriparks, because Navneet highlighted how it's done so well. First the gainers, Vakrangi, SpiceJet, 2 days on a trot now, that's done well. And Aegis Logistics, in light of the deal that has happened with Snowman's, I reckon some of the logistic players are doing okay. Not too many losers really worth talking about. Maybe Arvind Fashions stands out 3.5%. Just one last stock that I want to mark, Gateway Distriparks, because our headline suggested that that stock has had extended gains today, 12.5%, and shouldn't surprise. I mean, Kotak report speaks about a target of 190. Even if you don't believe that, it just shows the optimism that is there in the stock now that they're reducing their leverage. But if this is what's happening to the larger universe, what's happening to the more liquid universe, Navneet will highlight that for us. Navneet. Thanks for that, Neeraj. While the markets may have come off the high point, and we're not seeing any sort of fresh short build-up, at least so to say. Even if you look at both Nifty, Bank Nifty futures, there you go. Nifty futures open interest is down 2.5%, giving you clear signs that long positions are being unwound at higher levels. Premium on Nifty futures is currently 70 points. Well, a Bank Nifty, remember on Friday there was a major build-up when it came to futures of Bank Nifty. Open interest had gone up by 24-25%, but the premium has still been maintained around those levels of 190 to 200. So it's clear sign of profit booking at higher levels. But India Volatility Index, which closed at 7-month low on Friday around the levels of 10.5, that's inched higher, though levels of 11 to 12 to 13 are considered comfortable levels for the bulls, but still it has bounced back from those lower levels that we had seen in the last 7 months. In terms of options data then, what sort of levels you should watch out for? The 12,250 call has seen aggressive writing in trade. That's added nearly 11.5 lakh shares. Even the 12,300 call has added about 18 lakh shares. Remember, we've been highlighting in terms of maximum open interest, it is at the 12,300 call and the 12,200 put. So that's a very narrow range we've been working with, but there's been intraday unwind unwinding at the 12,300 put. I remember when we were doing the F&O show, almost 8 lakh shares were added, and now it's showing just about 4 lakh shares. So that's telling you maybe the bears feel that 12,300 may not be crossed, at least in the recent, in the near term at least. So the range will be 12,200 to 300 on the upside. Mindtree, in terms of stock futures, the stock continues to do well. It was up 13% in the last series, that's the December series, and now it's trading just 2% away from its 200-day moving average. There's both price action as well as open interest action seen in today's trade. 31% higher in terms of OI build-up, telling you long positions continue here. Bata India is the other one where the January futures continue to see long build-up. In fact, 30% of the total quantity traded on NSE has been marked for delivery, which is giving you an indication there is cash-based buying and long positions also on the future side. And cash volumes have been higher, as you can see on your screen. The white line indicating today's volume vis-a-vis the average volume of last 20 sessions. Finally, just want to mark Yes Bank, where the futures have been trading with a discount of almost 6 to 7%. Also want to highlight 4% of the total open interest in Yes Bank is held by just one client. And as you can see on your screen, the underlying is at 47.6, while the future rate is 44.3, which is giving an indication that it's trading at a discount of nearly 6 to 7%. And the total open interest as a percentage of market-wide position limit as on Friday was almost 78%. And Neeraj, I think majority of the time in the December series, the stock was there in the F&O band. So if this sort of open interest continues to build up, I think just 2-3 days away and it could be back in the F&O band. Yeah, well, that'll be interesting. And then, well, we've today, I think the cash market volumes too. Just before we get in our guests, if we can just put up the AVAT function for Yes Bank in the session today and just see what's happened to the cash market volumes to 120 million shares, as Navneet was highlighting. One, that there's a discount. Two, there is, while the cash market volumes don't, the cash market price action doesn't show that, there's some fairly interesting pricing activity or volume activity happening in Yes Bank on the cash side as well over the last few days. In today's session, slightly lower than those averages. But without much ado, let's get in our market voice. Saurabh Gupta of Quantum Mutual Fund joins us right now on the show with his thoughts. Saurabh, good having you. Thanks much for joining in. Saurabh, are you in the camp which is penciling in some bit of optimism in the run-up to the budget? We are not in the business of making short-term market predictions. I'm not asking you to give levels, but do you believe this momentum that we are in might continue well until the budget?
Look, so if I could define this year's performance of the stock markets, is one word defines pretty well is polarization. Few stocks driving the whole index up, whereas the market continues to lag behind, and the broader market is reflecting the pain in the broader economy. So not specifically the budget, but we believe that until and unless there is a improvement in the macroeconomics, we don't see a broad-based rally coming up in the markets. We have been meeting a few corporates. We are seeing that some demand recovery after the festive season has taken place, but the sustainability of that demand recovery is important. So we'll continue to wait about next month or next few months to see whether this sustainability of demand recovery for the corporates, if it continues, then maybe the broader market could also move in direction of the index. Otherwise, we believe that this polarization won't last for long.
Mm-hmm. Saurabh, you're suggesting polarization won't last for long. Well, that was the theme which actually worked out in 2019, where just fistful of stocks contributed to the 12% gains that we've seen on the index. Let's say if there is any sort of demand recovery which comes by, and we'll get an indication of that as day after tomorrow, we also get the monthly sales number from the auto space. Do you think auto pack will shift gears now going into 2020, or it will take more time, let's say 1 or 2 more quarters, also see how the response to BS6 implementation is?
Yeah, we believe that 2020 there will be a demand recovery for autos, because structurally there is no reason why autos should not do well over a long period of time, and last year has been a decline in volume growth, but there is a latent demand that should come up. Plus in the first quarter itself, first quarter for the CY20, there will be some pre-buying happening before the Bharat 6 norms come in. So we continue to believe that auto is a sector where valuations are good. If you look at companies, their cash flows, return on equity, everything looks very attractive for a value manager. And this year should see some demand recovery for auto companies, both both the four-wheelers and the two-wheelers, and also tractor companies. So we continue to be constructive on these names.
Interesting, Saurabh. Unless we are wrong, the data that we have, at least on the tax saving fund, you are positioned squarely in the two-wheeler names. So is that a correct assumption that you prefer two-wheelers over four-wheelers?
Yes, but that is because purely on valuations, we prefer two-wheelers because the valuations are very attractive, and we believe that at these valuations, these companies are a bargain, given their strong cash flow generation, their return on equities, their brand positioning in the market, their market share. We continue to feel very strongly about the two-wheeler stocks, but we believe that even within the four-wheeler, the demand should revive from here on. We don't own because the valuations, we still believe that valuations could get more attractive if we get an opportunity, but we don't own any four-wheeler purely because of valuation concerns. But we do own a name, agri and agri machinery name in our portfolio.
Okay, shifting focus away from the autos then, Saurabh, what about the banking stocks then? Of course, we can't ignore this space considering the sort of weightage it has on Nifty. Almost 40% weightage is coming from the financials. And this year itself, we've seen good recovery in at least a couple of these private banks, be it ICICI Bank. Kotak has done pretty well this year. But going into 2020, do you think PSUs could be back in focus? Reason being favorable verdict also coming with regard to SR Steel case. Can the recoveries be higher going into Q3 and Q4? And as a result of that, do you see any sort of buying coming into the PSU banks?
Look, so PSU banks are always a cyclical play, a very tactical play. For a long-term buyer or a long-term investor, we believe better underwriting skills which private banks have, people should focus on that, because PSU in every cycle they get stuck into these NPA problems and other issues, and structurally they have been losing their low-cost deposit franchise. So we believe good private names which have good underwriting skills and have been building their low-cost franchise on the liability side are a better name. At good valuations, you should create a portfolio of these names instead of focusing on PSU banks. PSU, we believe that the largest of the PSUs is one which is still able to hold its franchise very strong on the liability side, is a good corporate lender. Besides the largest one, we are not too constructive on the other names on PSU banks.
Okay, that's about the banking space. Just looking at the exposure your quantum tax saving fund has, and that features IT heavyweights in the form of TCS, Infosys. Of course, Wipro is also there, but that stock's not done anything in the last maybe 1 or 2, 3 years as well. But overall, IT is a pack where rupees just depreciated nearly 2 to 2.5%, I believe, so far in this calendar year, and we're heading into 2020, a year which will also see presidential elections in United States, from where these companies get majority of their revenues. What's the outlook there? Do you see any sort of sector rotation happening?
Look, so we should look beyond, in IT we should look beyond the currency depreciation and the presidency election, etc. The longer term theme is that there is a very strong demand environment in place globally for IT services. With technology changes becoming more and more frequent, IT services will continue to get its fair share of volume demand. The companies are very well managed. On the digital side, on the newer technology side, they are able to increase their prices, at least on the on-site side. And on the offshore side, definitely currency does help, but there are other levers also to manage the margins. So if you look at long-term margins of most companies, they've been managing on pretty well despite these all volatilities that come and go. These are very good cash generating companies. They have very, very strong return on equities. The corporate governance are very, very good. So we believe from a longer term perspective, these news come and go, and if the stock's correct, it could be a time to add these names and continue to hold them for a medium to long term.
In terms of pockets which do not have large cap presence, Saurabh, in your funds, where is it that you have the highest positive bend? Which theme, which sector? Strictly in the non-Nifty, non-100 names.
Sure. So we generally are bottom-up stock pickers, and over last 1.5 years, we have got good opportunities to pick up a couple of NBFC names which have fallen across the board, and there has been no differentiation between good quality NBFCs with good brand who have been able to raise capital and not so great NBFCs. So we have got good opportunities to pick up 1 or 2 NBFC names over last 1.5 years where valuations got really attractive. So we believe that is a space one should look at where everything has fallen, but there are some names which we have over last 10, 15, 20 years have seen a very strong franchise that they have created. The ability to understand that specific risk that they operate into is very, very strong. And they have not faced the kind of liquidity issues because they have been focusing on ALM matches on their balance sheet, and these are the names which have also fallen because the whole sector has been now punished. So these are the names where you can find value and you can create real returns for the investors over the last 3 to 5 years.
Okay, Saurabh, we leave it on that note. Thanks a lot for joining us and taking us through your views on the market. Well, talking about the markets, they're still hovering around that mark of 12,230 thereabouts. Nifty Bank, which had closed at record high levels on Friday, is also witnessing profit booking 32,300. Possible, can we just pull up the turnover? Remember, it's a thinly traded day. Volumes have been declining in the last 2 to 3 sessions. There you go. NSE cash is just about 18 to 19,000. Remember, on an average, usually we see volume of above 30,000 crore for NSE cash. If that picks up in the last hour of trade remains to be seen, but F&O volumes have been pretty decent considering this is just the second trading day of the new series. Well, that's about the markets. Let's move on and talk about some individual stocks as well. While it may not be as cold in Mumbai, the whole of North India is going through a period of bone-chilling winters. And how is that going to impact the financial performance of a company like Monte Carlo Fashions? Let's ask Sandeep Jain, who's the executive director of the company. Mr. Jain, hi, good afternoon. And thanks a lot for joining us today on BloombergQuint. While the entire of North India has gripped that winter chill, has that had a positive impact on your sales this year? How has the winter season been this year vis-a-vis last year?
Yeah, definitely. The impact is positive. There are 2 reasons. One is the winter season is definitely, December has been I would say the most coldest if we compare the last many years. And secondly, the winter is on time, so that pushes the fresh sales as well as the sentiments. So both of the factors are very positive for us.
Okay, and what percentage of your revenues currently are coming from the woolen vertical? I think the company in the last 2 to 3 years was trying to increase their revenues from the cotton segment.
I would divide into 2 categories. One is pure wool sweater, which we call as woolen category. And second is our cotton category, which comprises of jackets, sweatshirts, tracksuit, t-shirts, shorts, trousers, and denims. So the woolen category contributes right now around 25 to 26% of the revenues, and balance comes from the other categories.
Okay. In terms of inventory days, sir, how is that looking? Because I believe in the last year we had seen inventory days for a company like yours going up, because of which the cash conversion cycle was somewhere about 130 to 135 days. Is it still the same, or there is any sort of improvement there?
Yeah, the improvement is there. It will come down, but how much I can only let you know by end of this financial year only. But secondly, I think if we talk about the inventory at the retail level, that is definitely down as compared to last year.
Okay. And with inventory being down, is there a seasonal pattern that the retailers would follow of stocking up the inventory, whereby it helps a company like you?
Yeah, whenever the inventory is less at the retail level at the end of the year, so next year definitely there is more booking, and the next year the booking and overall growth in woolens actually goes up. It's a season which ends at the lesser stocks.
So what we are trying to say, Mr. Jain, is that while the winter has been cold and the demand and offtake in the current season might also have been higher, the inventories are low, which also augurs well for the momentum to continue in the next year. Am I getting this right?
Definitely, you are correct.
Okay. Now, Sandeep, what does this do for your business prospects for the quarter gone by? Arguably, with the capacities that you may have, with the well, export markets that you may be entering in or already into and the kind of demand thereof, how do you think the next 12 months are poised to be? And how do you think the quarter gone by has been like?
No, we don't do exports. As far as this quarter goes, this quarter is better definitely as compared to last year, despite the slowing economy, despite their challenges in the economy. But I think that we are hopeful of closing this financial year. I'm not talking about the quarter, but whole financial year will be closing around 10% up as compared to last year, as far as revenue is concerned.
Any fundraising plans, Sandeep, and expansion plans going ahead? Are you looking to tap into other geographies as well? Because currently majority of your revenues come from the North Indian market.
There is no fundraising plan because we are sitting on a cash of around 150 CR. And definitely, yes, as far as the expansions are concerned, we are adding around 30 exclusive business outlets this financial year. And we are also trying our best to make our presence felt in southern and western region.
Okay, and would you plan to do with the cash which is lying on books of about 29 crore?
No, we have 150 crore of
150.
cash on our books. Recently, we went for buyback also 55 crore in this financial year, last financial year. And we are a company which is paying regular dividend every year, around 120%. So we are basically using this cash for our working capital requirements also.
Okay, so promoter stake is somewhere 66 to 67%. Would the promoters look to increase stake?
Already we increased because we didn't participate in the buyback.
Correct.
Earlier the stake was around 64.5%, but it went up 3% as we didn't participate into the buyback, and actually our shareholding has increased in the company.
Sandeep, just one last question, and this is a concern in the market. One of the top investor in the company, I think it's Kanchi Investment, there was some talks that they would want to exit from the company. Have you had any conversation with them? Are they planning to exit from the company, and what's their current stake?
Yeah, because their fund is having a limited time, so that fund is going to close in next, I think, 1 year's time. So definitely they would like to. They're looking for another investor who can take their stake in the company.
Okay, and their current stake is about 9 to 10%?
Yeah, their current stake is approximately, I think, around 9 to 10%.
9 to 10%. And are they in talks with some investors already, and the deal will happen in the next 1 year, you're suggesting?
I cannot let you know about timing of the deal, but definitely they're in touch with many investors whom they're talking right now.
Okay. Sandeep, we'll leave it on that note. Appreciate you joining us today and taking us through the growth prospects of the company, and wishing you a very happy new year.
Thank you. Thank you, same to you.
Okay, that's the management of Monte Carlo, which is in focus today because of the winters we've seen, at least in North India, where I think Srinagar, Neeraj, has recorded its lowest temperature in last decade.
Talk about weather's shifting. We experience floods, we experience very hot summers.
Yeah, this year has been all about extremes, I guess.
And I think we spoke about the same thing last year as well.
Okay.
It's just...
We're setting new benchmarks.
No, you're right, yeah. I think that nails it. We're just setting new benchmarks almost every single time. But yeah, there's bone-chilling cold across North India. And that's why we were trying to talk to Monte Carlo Fashion to try and assess how is business looking like for them. This must be really tough, but hey, things are moving ahead. Actually, not that Aditya Birla Fashion has gained too much in the session today, but all of those companies which have some presence would actually be doing well for themselves. The other, just moving on, and the other set of stocks which are doing well, and one of the names that we've consistently highlighted the last few days is APL Apollo. And I just see this stock, when I look at the list of stocks which are trading close to 52-week highs, there are two names that pop up. One is APL Apollo, which is up another 2.5%, and one is SL Propack, which with this 5% uptick is up another 5% in trade. So do watch out for some of these names. They seem to be doing okay for themselves. But as we stated in the morning as well, 2020 will be the year when broader markets make a comeback. That is what the BloombergQuint market poll is suggesting. The poll, conducted amongst 26 fund managers and chief investment officers, have responded on a whole host of other questions, which both Darshan as well as Navneet will take us through. Darshan, let's start off with the benchmark indices and the upsides that our respondents see in 2020.
Yeah, so basically, majority of them do believe that the upsides will be less than 10%. That's what the indication is. We have the poll on the screen. So basically what we say is that only 5, we spoke to 26 respondents, 5 of them believe that in excess of 10% gains are possible, but 21 of them do believe that the gains will be less than 10%, and majority of them, it's equal actually between 5 to 7% and 8 to 10%. So that's the trend that we're seeing in as far as the Nifty is concerned. As far as the other trend is concerned, will the mid-cap and small-cap end of the market outperform in 2020? The overwhelming response is yes. This time around, it's the Nifty 50 stocks or the Sensex 30 stocks which have rallied, and that also a select few of them that have taken the benchmark indices higher. Mid-caps and small-caps actually have been massive underperformers. So there is an overwhelming response that this time around there will be. Will there be a pre-budget rally? 13 of them do believe yes, there will be a rally. 9 of them believe there won't be a rally. 4 can't say, and there are a lot of triggers, especially what's been spoken about, any cut in interest income tax that could come in. That could be the big trigger that we're looking at. As far as the income tax, what we were speaking about, will that spurt investments? 15 actually say they can't say, 9 say a yes, and one of the key reasons is that post the cut in corporate tax, the markets did manage to rally, but then there was also a big sell-off that came in, coming back to the levels where they started. So that's where people may be a little skeptical in terms of what is happening. What are the outperformers? And banking stocks have done well. They've outperformed even the Nifty. So 14 of them do believe that the banks rally will continue and they will do extremely well. And you combined it with the non-lending financials, which gives that the BFSI space will do extremely well this time around. PSU firms, given the fact that the BPCL divestment will happen in next year only, it could be. What is the dark horse this time around? Auto as well as telecom are the two front names that came in. Auto, obviously, we will keenly watch out for the numbers that will come out. The December auto sales numbers that will come out. Again, pharma, capital goods cement, nothing much happening on the economic front, this on the export side, and the capital goods cement on the domestic side. So auto seems to be the consensus buy that is stock spoken about. What's the joker in the pack? Not too much importance on Trump as well as the US election, because majority of them believe that again it will be Trump that could potentially come back. The trade war has been going on for a while, so not enough serious discussions about that. Crude and domestic factors again form majority of probably what could come in. So that's the trend that we are seeing as far as the broker poll, as far as the investment manager and fund manager polls is concerned.
Well, despite Trump, despite trade war, crude remains the biggest monitorable and the joker in the pack for the respondents. 26 of them CIOs as well as fund managers and money managers. So pretty interesting that crude remains the top draw when it comes to a market moving event for India. But let's turn focus to the domestic factors and now. And Navneet, what does the poll have to throw up about those?
Well, Neeraj, to begin with, when do you see the economic turnaround, and that's the growth level? Remember, GDP in the second quarter had slipped to 6-year low of 4.5%. Majority of the respondents felt that there could be a recovery coming in by the second quarter of FY21. Almost 13 respondents felt that. Besides that, 8 of them said the recovery could come in as early as the June quarter of the first quarter of the next financial year. Remember, though markets had given you returns this year, but in terms of economic data, we were only heading lower. Moving ahead then, the next question was biggest domestic threat to market rally in 2020, and it was a divided house, and the two factors which most of the respondents felt: slow credit offtake, and the second was delay in consumer demand recovery. Remember, these two factors weighed in this year as well. Offtake, where slowdown was seen in the rural market, and of course we did see in terms of consumer demand recovery not coming. Let's see if the next financial year holds that. The full focus will shift to the budget now, where the street is hoping for some demand side measures to be announced by the government. Fiscal deficit, that target will be met by the government or not. The target set for this financial year was 3.3% for FY20, and now with divestment concerns now coming in, where the government may not be able to meet the target that they have set of 1.05 lakh crore. Well, all the respondents said the government will not be able to meet the fiscal deficit target that they have laid out for the current financial year. Remember, with revenues falling, now if they don't meet the divestment target, they will have to step up investment, which only means growth will take precedence over fiscal prudence going ahead. Next up, where will the rupee end then against the dollar? And 21 respondents felt the range will be around 70 to 75 to the dollar. This year itself, rupee has depreciated by about 2 to 2.5%. So whether that range is maintained or not remains to be seen. But just about 3 respondents felt that it could depreciate further, even above the mark of 75, and could fall on to levels of 80 as well. Brent crude prices in 2020, the upper end, which was highlighted by respondents, was 73.5 to the dollar, while at the lower end they fell. Crude could be anywhere between 58.2 to 58.25. Remember, if the crude prices go up, that has an impact on the rupee. That also has an impact on the target, fiscal deficit target, which the government has set out. And finally, gold, which has gone up 18% this year. Remember, the gains come in at a time when there was risk on trade coming in global equities. You did see US markets trading at record high levels. In fact, for that matter, globally equities have been driven due to liquidity. So the upper end for gold, $1690 per ounce is the level given by respondents, while at lower end, it's about 1386. And remember, just in the last 2 to 3 sessions, gold has tipped that mark of $1,500 per ounce. And Neeraj, on that note, while market participants could be factoring in another 8 to 10% rally for the Indian equities, that's for the index Nifty. Let's hope for a better 2020 in terms of macro indicators, which deteriorated this calendar year.
Yeah, and hopefully, if the wildcards do not turn adverse for India, it might just be all that well. Let's wait and watch if that happens. But before we move full tilt towards the last 1 hour of trade, it's important to get in perspective on some of the here and nows as well. Adani Green, the top performer in the Nifty 500 space this far, the top performer in the BSE small cap space this far, and up another 3.5% today. Part of the reason for the up move could be the management's decision to borrow more and more from overseas, where loans are for a longer period and also at lower rates. But the market is also focusing on the business model. Sharad Johnson to tell us what's changed for the renewable energy arm of Adani Group. Sharad, it's a stock that most people don't quite know much about. What is it that we're trying to say? Is this information public information? What are we bringing right now?
Well, Neeraj, first of all, the stock itself, has, gone up almost more than 250% on a year-to-date basis. Now, if you see the stock, and we compare it with BSE Power Index itself, there has been a divergence which has been seen, when it comes to, returns, right from the month of September itself. So basically, the thing is, the company had its analyst takeaways, coming in on December 12th itself, and we were able to go through the documents. The first thing the management did state is constructing larger plants, so in order to achieve scale-led efficiencies. Apart from this, the company also wants to increase its portfolio size, as the government has committed to a Paris Agreement and plans to install renewable energy capacity, for the sources of almost 175 gigawatt in 2022 and almost 300 gigawatt for 2030. Apart from this, the technology will also help reduce the manpower with the introduction of robotic cleaning and drone monitoring. Apart from this, the management did state that the capital expenditure per unit has been falling and the capital requirement has declined by 75%, while the steel and land requirements have fallen by 35% each. And lastly, there has been healthy offtake, seen by NTPC and ACIC. So basically, 65% of power purchase agreements have been actually tied with these both parties, and the entire plant itself, the tariff profile remains fixed. Now, going ahead, what are the future plans for Adani Green Energy? We look at it's looking at a $1.8 billion rolling fund. So this will actually eliminate the risk of debt capital. But however, some issues remain. Especially, it aims to clear these issues with Tangenco and Karnataka Discom or the payment of LC mechanism. So these are some portions, which we are actually covering, and we did definitely do a story on it, and viewers can actually log on to BloombergQuint and see a story on that. Back to you.
Thanks a lot for that, Sharad. Well, Adani Green certainly active and finding its space under the sun. But let's talk about, look at that, 12-month performance, 277%. Hemen Kapadia of KRChoksey joins us on the show to talk about the markets at large. But Hemen, can one predict something like this, 277% for a stock in 12 months? Adani Green, almost all of those stocks, but Adani Green is just under orbit altogether.
No, at least technical parameters, I'm not sure I could come anywhere close to predicting something like that. It's just, you hit a fluke. It sounds like a dream, but...
What does the dream end now, or can the dream continue? What do the charts say?
Okay.
If it's possible to say, that is.
Yeah, if you're talking in terms of the dream, first, Neeraj, is a new listing. We're at all-time high, so no, I'm not even sure when it ends because I don't have any data to go on. It's just gone up one way, so no comment.
Okay. Okay, let's leave that out. Let's focus on the markets. It's been a quiet day. Navneet mentioned at the start of the show, Hemen, that we've probably seen some bit of profit booking after starting off well. Any causes for concern, or this is a flat day and the uptrend still remains?
I'd go with the flat day uptrend remain, Neeraj, because New Year, I think nobody wants to come to the market. I wish we had a holiday on the 1st, but that's not happening. You see the rollover figures, I think Navneet would probably agree with me. We've had the open interest in the Nifty at around 1 crore 15, 17, 18 lakh something. I mean, we saw significant addition in Nifty, Bank Nifty both on Friday. So we started the new series on a very tepid note. So I guess it's a lack of activity. The VIX is also seeming to suggest that Neeraj, because we're at lows. I mean, 5-6 month lows. We're at 11.11. It's obvious people are not expecting anything, so the VIX has cooled off. That's one of the reasons why the market is sustaining, and they don't think anything is going to happen. So I think it's dull. Is it a lull before the storm? I'm not sure, but it's very clearly lack of activity, lack of interest, and yeah, and yes, profit booking, yes. If you see 12,292, Neeraj, we went that a few days back. We've come almost maybe a few 5 points here and there. We've come there. So obvious supply from the earlier high. The funny thing is the Bank Nifty went to 32,600 instead of 32,500. It went 100 points higher. But net, I think it's tired profit booking. Ideally, we need to cool off a bit more. Maybe it takes a week or so of not doing anything. I think that would make the market more healthy. So I agree profit booking, but it doesn't seem in a mood to give up too much, and with an VIX where it is, I guess, downside slight, but not too much.
Okay, so that's the view on the indices. Let's wait for next week and wait for the volumes to come back into the markets. Probably we can see any directional move then, because so far it's been buy on dips market. On that note, let's also invite Ajit Mishra of Religare Broking. Hi Ajit, good afternoon. Would you agree then at current levels there is resistance around the mark of 12,300, but it remains buy on dips?
Yeah, good afternoon, Navneet. Yes, it's true that we are seeing Nifty facing hurdle closer to 12,300 mark, but at the same time, the buoyancy in the banking and the other sectors is helping the index to sustain the higher levels, and it's still a buy on dips market. But at the same time, since the range has become narrower, earlier it was 12,000, 12,400 for the last week that we were anticipating. Now we feel that 12,100 is going to be critical. Because we are no doubt witnessing overbought conditions on weekly and monthly charts as well. So considering that, one should be cautious in the index, but 12,100 is the area where we have very strong support, and plus the Bank Nifty is also still looking buoyant. So considering that, we might test 12,300, 350 levels first before coming down to 12,100 or lower levels.
Okay, so those are some key levels to monitor on the index. But Ajit, in terms of individual stocks, what are you betting on this afternoon?
So both the recommendations are on the long side. We are seeing, buying interest emerging in some of this mid-cap and large caps counter as well. So considering that we have Dabur on the long side today, so after consolidating for almost 10 to 15 days, the stock has witnessed a breakout today. So it's a buy recommendation with 457, 456 as the stop loss, and closer around 475, 480 as a target area. And the other counter which we are looking on the positive side is Ashok Leyland. Auto, private banks, these are the sectors basically where we are seeing positive momentum to continuing. So Ashok Leyland is the next buy candidate after consolidating a very narrow range. The stock is up for a breakout, so the risk reward is very favorable. So considering that, we have initiated a long call with 78 as stop loss and 87 as a target.
Okay, Hemen, your individual stock ideas?
Firstly, I have a buy on Tata Motors, Navneet. I believe even from a longer term point of view, the worst is over. Stock is on the verge of giving an upward bar reversal in the current month. We've been consolidating sideways for around 9 trading sessions. The volumes have picked up today. Indicators are giving crossover buys. The weekly chart remains positive. Indicators are in support. And we've been, frankly speaking, we've spent almost 12 weeks of consolidation after that spike up from 110 to 180. So I believe we've digested this rise, we've absorbed the selling, and above 184, I think we're going to go up further. So Tata Motors at 179, 174 target, 189. It's a slightly modest target. The other one is Axis Bank, Navneet. We've been range bound for almost 2 months now. Yeah. Range is between 707, 763. We walked into supply just at around 763 today. But the weekly indicators and the daily indicator seems to suggest it's going to make an attempted breakout. Please note, it hasn't yet broken out, but I'm anticipating a breakout. So buy at 752, stop loss 745, target 766. And above 766, I think a 25-point jump seems like a very strong possibility.
Okay. So some ideas from our technical experts, and of course we'll revisit some of these stock names all through the trading 50 minutes of trade left as well. Let's focus a bit on the fundamentals as well and get in Pankaj Pandey of ICICI Direct joins us right now on the show. Pankaj, good having you. Thanks much for joining in. As we look at what's gaining in the large cap space today, Pankaj, there seems to be some bit of resilience that the two telcos, and I'm calling Reliance Industries as a telco too, the two telcos have shown Reliance, after correcting quite a bit in the recent past, is kind of stabilizing. Bharti Hetal refuses to budge too much and is seeing buying at lower levels. Bunch of fund managers also want to log into these stocks at attractive valuations. Could this be a space to watch out for the next 6 months?
Hi, good afternoon, Neeraj. Absolutely, I think telecom is one space which is sort of shaping up well, and if you get a policy from the government in terms of base tariff, I think what it will ensure is that you'll have certain sustainable growth for this entire sector. And within the telecom, I think Bharti, according to us, is one of the best players, whether idea remains or not. So from that perspective, I think that is Bharti Airtel is looking very attractive according to us, and we have a target price of 550 on the stock. I think for the next 1 year, things are quite interesting for the sector. I think policy perspective would become far more clearer. Then you have 5G, which also has the potential to sort of change the dynamics of the industry, because largely up till now we have been only looking at voice and data as the revenue sources. Possibly going forward you will have multiple other sources which can sort of which opens a lot of opportunities for the entire telecom as a segment. So which is why I think Bharti, even though there has been a bit of a price performance from lower levels, we still believe that within large caps this is one of the good stocks to look at from a risk reward perspective.
Pankaj, today, buoyed by the deal, there is some cheer in a couple of names. Gateway Distriparks in particular, 11.5% higher after the decision to sell Snowman Logistics to Adani. Now, 3 names out here involved. My question is largely around Gateway Distriparks, and what do you make of this deal and the management decision to deleverage the balance sheet? Do you like this move, and therefore are you bullish on this space? And if not, if you track Adani Ports, then a word on that one.
So we don't cover Snowman, although we used to cover Gateway Distripark. I think in Snowman the challenge was that for a segment like that it requires good amount of scale, and somewhere down the line the company was not able to achieve that scale. And within their capacity also, I think 13% was coming from commodities like potatoes. So we are probably, which is not that remunerative, and as a result of that business had growth of about 2%. And GDL was already sort of reeling under debt pressure, and because of this deal they'll be able to reduce their debt, so it is quite positive for GDL. But overall I think we'll have to look at Snowman Logistics very closely. If we see scaling up of capacity going forward under the new promoter, I think there's a good business to sort of look at. Probably you don't have too many listed players or direct players in this segment. But it's an interesting opportunity. Let's see how things sort of pan out. Like I said, we don't have a coverage on the stock, so I'll not be able to comment in terms of forward numbers or what our target prices are.
Okay. That's about the deal which took place, and clear reaction, positive reaction at least seen for Gateway Distriparks, a company which has been focusing on deleveraging its balance sheet. This is the second deal that they've done this year to reduce the debt on the books. In fact, the company did highlight by the end of this financial year, they plan to bring down their debt to levels of about 350. Having said that, let's pull up the Nifty Metals Index. When we started the day today, it was trading in red, but there's a sharp recovery which has come in there, and the Nifty Metals Index is now sitting with gains of 1%. Just key constituents of that index from the likes of JSPL, which is in focus in the recent past, that stock sitting with gains of 3%. You've got Steel Authority, Tata Steel, JSW, and even the non-ferrous players from the likes of Vedanta. All of them are now sitting with some amount of gains. Hemen, you want to come in here? Would you trade any metal stock?
Yes, I think you picked a very valid point, Navneet, because metal index has been moving sideways with a distinct upward bias. We've given a breakout, instead of cooling off, it's gone higher. And when stocks like SAIL move, I mean, that's like a earthquake happening, right? It's an elephant. It takes time to move. So that is distinctly positive. And yes, I think the one which looks good from a longer term point of view is JSPL, and the one which is the dark horse, Navneet, is Vedanta. Now, Vedanta hasn't done much. Hindalco's moved, JSPL, JSW, Hindal, I mean, every other metal stock worth its name has moved. It's only Vedanta which has cooled off. It's on the verge of getting an upward key reversal on the monthly chart. I believe a medium-term base formation is place. Also, a longer-term bottom could be in place. And after almost 18 to 20 months of a decline in Vedanta and most of the metal stocks, Navneet, I think we are seeing some action coming in. Even if this is a pullback, the quantum and the size of the fall would mean a few positive months. So metal, yes. Vedanta top of the pops. Disclosure, I have a holding.
Okay, that's about metals. Pankaj, you want to come in here with regard to metal stocks where the demand globally seems to be improving now. Of course, start of the year was not that great for these metal companies. Prices also for steel moving higher. That's what been reported in the market. At current valuations, a lot of market experts feel that these stocks are available at good price. Do you concur with that?
So I think metal, we are not very sort of confident from a longer term perspective. I think most of the stocks are looking good trading buys. I think longer term, till the time we don't see rationalization of capacity, especially the high cost players sort of getting out of the business, I don't think structurally things change. I think this trade deal is a sort of a short term positive, because we've seen time and again largely that there's not much of a rundown in capacity in China, which is one of the biggest players across commodities. And a lot of these companies are government owned or government supported, so which is why rationalization does not happen. So that structural challenge remains, but we are sort of looking at spaces where the value-added content is far more higher. Something like Hindalco, which is looking attractive to us from a structural perspective. Their subsidiary is already doing fine. Then our sense is that going forward, if domestically, if we were to sort of push for more recycled products, especially sort of moving the plastic out, I think this company could have a role to play in beverages. It could have a role to play in other segments. So Hindalco is something which we are sort of consciously looking at from a structural perspective. Otherwise, I think most of the stocks, whether it is on the ferrous or non-ferrous side, are still trading buys and not structural buys.
Okay. Pankaj, before we let you go, while the usual ideas are out there for everybody, is there a dark horse or something which is in the mid-cap space and you have a contrarian buy out there which might do well in 2020?
So I don't know whether contrarian or not, but we like some of the names. Say for example, we continue to like the multiplexes, both PVR and Inox. I think this particular quarter also we'll see about 37-38% kind of a box office collection growth. Similarly, we are quite positive in the entire pharma MNC as a space, even though the stocks have rallied. Our sense is that if I'm getting 9 to 10% kind of a growth with lighter balance sheet, with good margins, and probably half the cost of, say, probably FMCG players, I think that is an interesting space. Similarly, hotels and hospitals are looking quite good according to us because one, your balance sheet is not going to get heavier because largely you will have either management contracts or in case of hospitals, since no new greenfield capacity is largely expected to come up, so what you will do is you will do better asset utilizations. So from that perspective, margin profile will keep sort of getting better for the players. So I think since the market is sort of polarized towards certain pockets and certain segments, so which is why we believe that it's a very stock-specific market. In banking, we are again positive on most of the tier 1 banks and then some smaller banks like CUB and IDFC First Bank.
Okay. Well, we wish you a great 2020, Pankaj. Thanks for joining in today. And look forward to, of course, hearing more from you in 2020.
Thank you, Nathan. Wish you the same.
Thank you so much. Okay, we will watch out for some of those names. The multiplex names today's session too are active. Just before we get in our next guest on board, Ajit, if I can get you in between PVR and Inox, which one looks better?
So, just from the trading perspective, of course, PVR is better, but for the fresh investment, I would say Inox is a better place, considering that we have already seen a very strong surge in PVR, and Inox is a disclosure also that we have recommended of late as our New Year pick. So we see the value there, and but both the counters, no doubt, both the counters are looking very strong on charts. So, but from the trading perspective, PVR is a better candidate.
Okay, well. 2 or 3 sectors fundamentally, not necessarily just what happens to stocks, but as the year draws to a close, CRISIL has come out with a note giving an outlook for various sectors for the year 2020. Let's get in on the guest from CRISIL, Hetal Gandhi, director at CRISIL Research. Hetal, good having you. Thanks for joining. And let's start off with the first one, Hetal, and that is automobiles. We had a guest today who looks at charts, and on the long-term charts, he believed that there is a chance of the index doing well. Now, fundamentally, how are automobiles placed for 2020? Can they see their fortunes revive?
So 2019 has been a really bad year across automobile segments. In fact, for segments like passenger cars, this is the first time that you are seeing a double-digit drop in volumes. We believe the Q1 of the calendar year 20 might not be very different. You might continue to see a drop in volumes across most of the auto segments as they prepare for BS6 norms, and the focus of manufacturers would be in correcting inventory levels and to ensure that they are making way for replacing it with BS6 inventory. So you might see the calendar year begin on a weak note. However, as we progress in the year, we believe you might start seeing an upward trajectory. The upward trajectory will be more led by revival first in the rural markets, followed by which you might see some respite in the urban markets. So given that most of the agri-commodities are on an upward trend, farmer profits might see a respite. Rabi output is also expected to be much better, given that reservoir levels are running high. So with that perspective, we believe that CY20 would start showing signs of revival.
Okay, and would it be across the board, or would it be for the economy-linked pockets like commercial vehicles, or would it be first seen in what is arguably believed to be a first port of call for transport, which is the two-wheeler space?
Yes, I think you're right. You would start seeing traction first in two-wheelers. As I mentioned, it would be more driven from the rural areas to begin with. So you will see a traction in two-wheelers, tractors. Followed by that, you will see tractions in cars, and CVs might remain weak, ending at flat. So you might not see a lot of growth, but you might not see more decline as well.
Hetal, a linked space is aviation. There are reports which suggest that maybe the aviation companies might report not the best of quarters right now, plagued by the higher crude prices as well. So 2019, despite lower competition, optically has not been the best of years. Can 2020 be different?
So there were a lot of challenges in, again, 2019. A, grounding of one airlines took some time for the other airlines to ramp up capacity to match that up. B, there were specific aircrafts which were being landed, because of which your maintenance cost shot up substantially. And of course, then there was implementation of the new accounting norms. We believe that passenger traffic growth, which went down to 3 to 4% in calendar year 2019. Your first quarter saw a drop because you did not have one airline functioning at all. So next year you can see a good 8 to 10% growth in domestic traffic. We believe that these volumes would be supported by a marginal recovery and a low base of last year. And they are still not going to be as healthy as the airline industry have been habituated to. The key over here would be if they will be able to sustain their pricing power. So in calendar year 2019, this was the first time that they saw a good, healthy increase in pricing on a full year basis comparison. The key would be if they are able to maintain some pricing power given the consolidation, you might see a good revenue growth rate for the sector.
Okay. Hetal, good afternoon. In the last quarter, at least of this calendar year, telecom stocks have been a news beat for increasing tariff after 3 years, or the verdict coming in with regard to AGR dues. Nevertheless, Bharti Airtel as of now is the top gainer among the Nifty constituents. Do you see, in terms of financials at least going ahead for these telcos, the 3 telcos which are there, could improve owing to the increase in tariffs that we've seen?
Yeah, so I think telecom is actually a very mixed story, if you ask me. All the players may not perform in the same direction. We believe that players who have a already good footing on the 4G landscape side of it, they will be able to capitalize. And yes, increase in prices would be a continuing trend. A consolidated market, and B, focus on shift in market shares already have panned out. So we believe that there might be more stability. You can expect a double-digit revenue growth for the sector in calendar year 20. So that is going to be a good sign, because that is after a pretty long period of time that the sector would see double-digit revenue growth. Capital expenditure would be extremely important. I think prudence in capex is something which will remain a monitorable for the sector. We believe that players will be wise enough to not spend too much on 5G auctions. And, in fact, if 5G auctions are delayed by a year, then it would be all the more better for the sector. So, combination of revenue growth as well as prudent spending is what is required for the telecom sector to continue in the space in which they are.
Okay, and the other space, at least for the majority of the year, which is not done well, is the metals pack. But last 2 to 3 months have been better in terms of stock prices moving higher, and that's precisely on account of optimism coming around the US-China trade deal. But keeping that aside, Hetal, even in domestic market, there are signs that demand is coming back, prices are moving higher. Do you see the cycle turning for these metal companies going into 2020?
So if you look at capital expenditure spends and infra spends happening in the country, you would see that fiscal 2020 would end up at almost a 5 to 6% kind of a growth in total spends. That is expected to go to around in the range of 8 to 10%, which is going to be a positive stride for metal companies. You have already seen almost a 12 to 13% drop in prices, which has happened YTD. So we believe that they might be at a bottom. One caution that remains for these companies is the iron ore auctions which are upcoming. While the cost impact of that might not be seen immediately in calendar year 20, but that would determine what their fortunes would be over the next 2 to 3 years. So next year looks better from steel companies' point of view. Cost escalations is what remains a monitorable.
Okay, Hetal, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us your thoughts. Appreciate your time on a few spaces that CRISIL has come out with a note with. Speaking of metals, stocks like Nalco have gained in the last few minutes of trade. Last 1 hour, it's gained about a couple of percentage points, so now trading nearly at the high point of the day. By the way, that's not all. If we just look at the slightly larger universe too, stocks like Chennai Petro have gained a bit. Sudarshan Chemicals is trading at, I think the day's high is 415 if I'm not wrong. And Aegis Logistics is 6.5% higher now. So it's not just Gateway Distriparks, but Aegis Logistics too, which has gained quite substantially. Hemen, you will comment on these two names, Aegis Logistics and Gateway Distriparks.
it just looks like more of a bounce currently, Neeraj. The bigger picture seems to be stabilizing. We've not broken 160 in the last 2 years, and 2.5 years. Obviously, there's very strong support. Currently, we are today going to close out the 55-day moving average. So I'd say it looks promising. A long-term adjustment process is in place. A medium-term bottom, probably yes. I believe, okay, it's 187. I believe momentum could pick up significantly once it crosses 202. I know that's probably another 5-7% away. But yeah, if I were to anticipate, it looks promising. And the other stock was Gateway Distriparks.
Yes.
Not fair to compare apples and oranges, but Gateway looks far better. Last month, Neeraj, there are 80 lakh volume in Gateway. Now, this has happened only a few times in the last couple of years. So, higher, I mean, this is gross, not delivery. Highest volume in the last 1 year happened at the lowest price of the stock. I mean, this is what movies are made of, right? So, firstly, and those levels have held. So, stronger hands have bought. We've reversed the downfall, which was 4 years old or 4.5 years old, Neeraj. Worst is over. We found a longer term bottom, medium term bottom confirmed. I believe a long term bottom is in place. So, okay, we've shot up from 95 to 125. So, I mean, sanity should prevail, but I believe the worst is over. A recovery has started. I think the next 6 to 8 months should be positive for the stock.
Okay, that's the technical view on Gateway Distriparks, which is up about 12 to 12.5%. Let's quickly take a technical view on Bata India as well, a counter which is up on good amount of volumes. On the future side, we are seeing long positions being taken here, and at current levels, I guess the stock's been trading around its key moving averages as well, 20% higher in terms of OI build-up right now. Very quickly then, Ajit, on the charts, looks like cash-based buying clubbed with long positions being built up on futures. Would you buy Bata at current levels?
Yeah, certainly, Navneet. After making a record high, we have seen the stock, consolidating in a range, and it has formed a buying pivot. And today we have seen a breakout from the same with this decent rise in the volume, which clearly indicates that it's set for the fresh up move and likely to retest the record high. So with the stop of around, let's say 1710, 1720, one can initiate fresh long at the current levels for 1840 to 1850 as a target.
Okay, so Bata India looking good on charts, but which are the other Fab 4 stocks which feature in Sharad Dubey's list? Let's go across to him and find out. Hi Sharad, good afternoon.
Good afternoon, Navneet. The first stock is Balaji Amines. The stock is up more than 10%, rising its highest in almost 7 months after SDFC Securities came out with its pick of week report, initiating a buy on the company and setting the target price with a range between 398 rupees to 445.45 rupees. So basically, the brokerage stated that there is a diversification seen in the portfolio of the products and a strong clientele. Even its subsidiary has actually ventured into building a capacity for intermediates. And lastly, the clampdown in China on chemical production will actually augur well for Indian chemical manufacturers. Up next is Essel Propack, which is up almost 5% after it has hit a record high of today, and also on a year-to-date basis, the stock is up almost 70%. And the next stock of the day is Mindtree, which is up almost 1.9% after fresh longs were seen with a high open interest build-up of 31% and volumes trading at 1.5 times the 20-day average. And the last stock of the day is RITES, which is up almost 1.8% after the company stated in its press release that it will acquire 24% stake in ISDC for almost 48 crore rupees, and the board also declared an interim dividend of 6 rupees per share with the record date coming in on January 10. So these four stocks are buzzing in the space today. Back to you.
Thanks a lot, Sharad. Well, there are a lot of stocks which are moving around. Now, Bharat Ventures, that one too has moved higher. It's sitting with gains of about 9% right now. In the morning, Jain had given a buy call on Indoco Remedies. So that stock's also gained about 6 to 6.5% today. And something like J Kumar Infra, that too has gone up by 5 to 6% right now. ITD cementation is also up and about with gains of 5%. Let's go across to Yogesh Mehta of Yield Maximisers, who joins us on the show now. Yogesh, the other space that I was looking at, dyes and dye intermediate stocks have shot up today, be it Bodil Chemical, Bhagaria Industries, Akshar Chemical. I don't know if you track these companies, but all these stocks have moved higher significantly. The gains are somewhere between 15 to 20%. Just just looking at one of the research note for Bodil last quarter, I think the numbers were not good because the prices of dye intermediate were on the weaker side. Are you spotting any trend there if you track these companies? Okay, I think there's a problem with the audio of Yogesh. We'll get back to him. But in the meanwhile, just pull up these stocks that we were chatting about. Bodil Chemical, Bulgaria Industries. Bodil is locked in upper circuit with gains of 20%. You've got something like Bulgaria Industries too, which is shot up just in the last 1 hour of trade. This one too is locked in upper circuit. And you've also got something like Akshar Chemical, which is up and about. Even Tirumalai Chemical, I'm not too sure if they are also into the same space. Of course, it's a chemical company, but Tirumalai Chemical is also up about 14%. Locked in upper circuit for all these three stocks. I think Yogesh is back with us. Yogesh, if you can hear us, if you track these stocks, are you spotting anything here?
Yeah, Navneet, good afternoon. All these dyes chemical companies are moving today in the session after falling almost 50 to 70% from their peaks in 2018 calendar year. But there is no much of an opportunity because China situation in terms of manufacturing into specialty chemicals and chemicals due to environment pollution control. So it is the same situation. But I think maybe the valuation wise and the profitability growth is not visible in 2019 to 20. But probably it would be a different reason why they are moving today only in this session. But otherwise, fundamentally, there is no overnight change into any of this name or any of the raw material costs which have gone down, and that can be a beneficial to them on the bottom line. But this could be a one of the space where mid caps are likely to move up in January month after a long kind of underperformance versus large cap, and where the valuation gap has now gone to a historical high between large cap and small mid cap indices valuation. So I think that this will be the trend for January February month. Pre-budget rally can be anticipated, and we may see this in different sectors every week or every day.
Okay, Nifty is back in the green, by the way. We're at 12,260, so that support of 12,250, of course, we breached that mark, but as of now, let's see where the closing comes about, whether we defend that mark even on closing basis or not. Pull up the Nifty Auto Index. A while back, you had the Nifty Metals Index moving higher. Now you've got the Auto Pack, which is up and about, almost at the high point of the day. Nifty Auto Index is up 1.4%. Tata Motors, Hemen had a buy call here. Tata Motors is now up about 4%. Hemen, would you revise your target or would you advise booking profit here?
No. I think we're heading towards 200. So unless you have a very shorter term view and then you want to book profit, fine. But I think the breakout comes down above 184 Navneet. So I think we are looking at a 5-7% upside from here. It looks good, consolidation. I wouldn't see a screaming buy because the market is elevated, but it looks good.
Yogesh, a quick thought on the auto space then. We'll be getting the monthly sales number a day after tomorrow. Will there be any signs of improvement?
Looking at the expectation of various brokerages, it shows that maybe a 2-3% growth in two-wheelers and 3 to 5% growth in this YOY in passenger vehicle. So that does not give a strong sign of revival, but at least the footfall of the dealership dealers network check shows that the footfall and inquiries are increasing, and the inventory days have come down drastically below 30 days now from 46 and 50 days earlier. So that shows some kind of backlog inventory has been clear, and BA6 transformation could be a next game changer from April month. So this may be in advancement of the stock price which are moving, but we will see the numbers reactions maybe day after tomorrow or so. But Tata Motors in particularly, we are not looking at anything on a domestic play at all. It is a global one, and post Brexit issue resolution, I think that could be the candidate which can see a turnaround ongoing. Maybe in 2020 could be the stock of the year. So I'm betting heavily on Tata Motors.
Okay. Well, Yogesh is betting on Tata Motors. Hemen and Ajit also have given out their bets. Let's also hear out Gautam Shah of Goldilocks Premium Research, who says that FMCG may not be the space to have in the portfolio despite an uptrend. In an interview to us earlier today, Shah explains why one may rotate out of FMCG to invest in other sectors. Listen in.
if you look at the NSE FMCG index, if I'm not wrong, two stocks constitute 45% or 50% of the index. I think it's Lever and ITC. People have been talking about stretched valuations in this space for a very long time. But you need to understand, when nothing was performing, it was basically FMCG and IT where portfolios were hiding into, and expensive got more and more expensive in the last 6 to 9 months. I think that is changing, because I think high beta is making a comeback, and people are sort of rotating out of FMCG and getting into some of the other, underperforming sectors of the last 6 months. So I think this is a sector which has been in an uptrend for almost a decade now. I'm not saying that it's going to collapse, but I think you could see a period of underperformance where the sector does not do anything special going forward. You've already seen that with ITC. It is at that important level of 230, 35. I think eventually it will break that as well. And I think this streak of underperformance in ITC and levers is going to continue for many weeks and many months. So I think you need to be in the right sectors, as I keep saying. I think IT and FMCG might not give you the kind of returns that people are looking for.
Okay, and by the way, I think Gautam makes this very valid point that portfolios may be in hiding. I think for a lot of us, it's important to also realize that you as an individual investor don't need to have a portfolio which is comprising 30 stocks because you need to diversify. No, the corpus is not that large enough, arguably in most cases, for liquidity to become a problem. So the portfolios don't need to have 25, 30 stocks if you're an individual investor. And I think therefore this point that he's making, that people might be rotating out of FMCG into some of the other sectors, might actually be something that you could do as well. You don't need an FMCG stock necessarily in your portfolio. There are other sectors which could be doing very well. Gautam, just wondering, before we get in full tilt to sectors as well, there's a lot of chatter about there being a possibility of a pre-budget rally. Some people say that we might actually have levels which could be the near-term peaks ahead of the budget itself. Does anything in the charts suggest something like that?
Yes, it does, Neeraj, from a broader markets perspective. Okay. As I said, on the Nifty front, I don't see any significant upside from current levels. At best, you could move to levels of 12,700, which is a target based on a pattern formation that we spotted a couple of months back, and we have been maintaining that. But the best part is the charts do not know when the budget is. So actually, I would not want to read the markets from that perspective. But the point which I made about broader markets, for the first time, when we look at the relative strength chart, which is the mid-cap index over the Nifty, this has been in a bear market for almost 2 years, consistently making lower lows. So not only is the mid-cap index, weakening, it is also weakening in comparison to the Nifty. Now, this ratio chart has not made a lower low for the first time in the last 1 month. And this is an indication that this underperformance streak might be coming to an end. And I think you saw that last week. If you remember, on the expiry day, the Nifty was down about 100 points and the mid-cap index closed in the green. And I think I haven't seen this happen in a long, long time. So I think the shift is happening. There are many stocks that are starting to perk up. There are many stocks that have created strong foundation for the last 3 to 6 months, just waiting for the door to open, and, when that happens, you could see many stocks, gain 20, 30, 50% in a very short span of time. So broader markets is the space to be in. Also, when we track the mid-cap index over the Nifty, the ratio currently is at a point from where historically in the last 20 years, a rebound has been seen. And that is the reason we have been recommending our subscribers that if you were to get in passively into a mid-cap mutual fund at these levels, or you could start an SIP at these levels, there is no way you're going to lose money. In fact, you're going to outperform the mainline indices hands down. So yeah, I think mid-caps and small caps, I think would be the theme for the new year, and I think that's where we recommend your viewers.
Gautam, very quickly then, in fact, that's the BQ poll also suggesting that mid caps and small caps will make a comeback in 2020. But what about autos? Do you see that as a dark horse?
Yes, it is indeed the dark horse. I think look at what has happened in the last 1 month. I think some of the auto stocks have come back really strongly, and the good part is the damage was so much in the last 12 months that the scope for recovery is really large. So most of the top line auto stocks we like, some of the auto ancillary names have started to do well. So the entire basket is actually looking good, and I wouldn't be surprised if this index is up 20% over the next 6 months. So autos and metals are two bigger themes to watch out for 2020.
Okay, remains to be seen whether we see that recovery for autos or not in 2020. But on that note, it's time to take a look at what the dealing rooms have been recommending. Darshan Mehta joins us with his channel checks. Hi Darshan, good afternoon.
Hi Navneet, one of the stocks that's been spoken today is Shobha Developers. It's not done extremely well today, it's up almost 2%, but very high volumes. It's done much more than what it's been doing over the past few days. So some of the HNIs are accumulating at lower levels today. Also there is heavy volume. So this is one stock that dealers are indicating that they are getting buy orders in the counter. Bata is another stock in which dealers indicate there is a breakout from the 50 DMA. Some of the domestic funds, despite being richly valued, are accumulating the counter. Decent volumes today on Bata also, so that's been spoken about. And finally, RBL Bank is something that's spoken about. It's up almost 2.5%. There is a buzz of a potential corporate announcement that could come in, some bit of funds coming in from an account which had turned NPA. So that's the buzz that's been spoken about. So that's something we'll watch out for today.
Wow. Well, the buzzes around some of these banks, RBL, yes, etc., keep on staying high. Darshan, thanks so much, though. A more informed set of buzzes that we're gathering from the dealing room sources. Watch out for RBL Bank in the session today. Chart check there, and then we'll talk about some of the other names as well, the likes of RCTC, etc. Ajit, do you want to come in on RBL Bank? Would you trade it?
So, yes, Neeraj, at the current levels, we may see some, further rebound. But if we'll compare it with the other private banking majors, still a laggard. So considering that, one should be very cautious because of late, like Yes Bank, RBL, both, witnesses heavy selling pressure at the higher levels. So at current levels, in case if you wish to go long, then 335 should be a stop loss, and clear around 370.75, that should be a target area.
Okay. Okay. Want to talk about IRCTC too, but before that, I think Sharad spoke about Balaji Amines. Pull up that stock, it's up about 10-11%. And the related competitor, or rather the other player out here, is Alkyl Amines, which has actually gained a little bit in the past, and therefore today the move isn't the greatest. It's just about 1%, 1078. Keep in mind though, Balaji Amines, there is a technical trigger out there in that HDFC Securities has released a note today which says that Balaji Amines is their pick of the week. Small market, pricing still okay. I think the October, November, December quarter look very robust for them. So both a chart and a fundamental perspective. Yogesh, to you first. Do you track these two names, either of these two names?
No, Neeraj, I don't track these two names.
Okay, but apparently from what we hear is that the quarterly numbers for these companies might actually be pretty attractive. Let's wait and watch if that happens. Hemen, any thoughts on the charts here, Balaji or Alkyl?
Both are looking good, but if you were to give me a pecking order, it's Balaji, because Alkyl Amines is an overdrive and Balaji is just getting into second gear. Simple. We are at all-time highs in Alkyl Amines. The previous high was 900. Balaji, the all-time high was 800. We are at 400. And the indicators on the monthly chart are turning positive now, while Alkyl has been like this for years. So, not on pure technicals, I'd say Balaji is closer in terms of a stop loss. We're forming a longer-term bottom, lot of headroom. So, it's clearly Balaji, but both are looking good.
Only the other thing is this fascination of the market with all these internet-based companies, Affle, etc., and IRCTC today up another 6%. Though today the mood is for I think the Tejas Express kickstarting, but just fabulous response to all of these businesses, isn't it?
Yeah, Paul. In fact, you can see that reaction in the stock price, Neeraj. IRCTC has been trading with good gains, and this is one of the stellar listing also of this year. We've had good subscription, good response, and even the listing was I think stupendous for this particular issue. But Yogesh, let me take your view then. Any of these companies, if you're tracking, of course, these were new issues of 2019. If there were any IPOs you subscribe to, any shares that you guys are still holding where growth prospects look interesting?
IRCTC is the one, Navneet, where which IPO had come, but it didn't get any allotment on that. But still, it's a good portfolio stock have added into for all the customers. That's a disclaimer I'm giving because I think that the growth rate for IRCTC, be it with the internet charges or the internet business, that comprises of more than 40% of the business, and any uptick into the price or the commission will be a very beneficiary for them. Plus the catering service, which contributes 16 to 17% of the overall business, that has also taken a price hike. So overall put together, the growth aspects seems that 23-25% growth rate for next 2 years is clearly visible. And the IPO price was oversubscribed because of the underpriced IPO. I think 600, 650 was a fair price. and was available at a similar level of around 800, 900 rupees. And I think if one can hold on to this could be a wonders. This can create wonders in the portfolio, at least 25 to 30% compounder for next 3 years.
Well, it has already created wonders, at least since its listing, Yogesh. The issue price was 320, and since then the stock is up about, after listing the stock's up about 200%. I think the theme this year has been park your money in under-penetrated spaces from the likes of AMCs or insurance companies. They have given you good returns as well, but IRCTC, I think it's a monopoly market leader, so you can't go wrong here. 6% higher, 933 is the level where it currently trades. I just want to pull up PVR. Remember, this one's been trading at record high levels. Long positions on the futures side continue. There were longs seen on Friday. The stocks tipped the mark of 1900. Today, the futures will tell you how much build-up we've seen. Yogesh, I was reading one report which said that cinema is here to stay and there is long way for OTT. What's your outlook for these exhibitors, PVR, Inox, Leisure?
Yeah, no, my belief is that Netflix and other Amazon Fire Stick and all, they are far from the competition with PVR and Inox, the listed space cinemas. I think the way blockbuster movies are coming and the releasing gets a humongous response, and that will drive the more and more profitability for these companies. Plus, there was a buzz in between about the cap on food beverages selling prices. That is now off the shelf. So that is giving some clarity. Plus, the average ticket size, which was hovering for last 1.5 years near 120, 130 level, that is now inched up to at least 140, 150 level. That is giving a more potential for these companies to grow. Similar way, the way we have seen in telecom, we may see an uptick into the prices of the minimum prices of the tickets from moving up from 150, 160, 170 level in next 2 or 3 quarters or so. So I believe that these companies will grow by 15, 16%. Plus, the X factor would be the expansion into their the new geography. They are expanding PVR as well as Inox, but PVR remains the leader. It's my favorite, and I'm expecting that the next year and the next to next, they will be having more than 750 to 770 screens in their portfolio, and that will drive more and more profits for them.
Okay. Well, let's take in closing strategies before we move any further. Ajit, I'll come to you first. One top BTST or STBT from your end?
So, Neeraj, as we were discussing about the performance of the auto pack, TVS Motor, after spending nearly 1.5 years under sideways to negative trend, is witnessing a breakout. So we could say that it's a medium-term trend reversal also that we are seeing on the chart. So it's a buy candidate for BTST as a positional trade. So 470 should be a stop loss, and clear around 495 to 500 should be our immediate target.
Okay. Hemen, what about you?
I'd have a BTST on Manappuram Finance, Neeraj.
BTST on Manappuram Finance.
Yeah.
And 1% stop loss, 2% target. Okay. Does Muthoot also look good?
Muthoot Finance. Yes and no. Yes, because we are in a short, medium, long-term uptrend. Fresh buy after it goes from 660 to 765 in 15 trading sessions, no. Not a short, not a buy, but a hold.
Okay, so those are the gold financing companies, by the way. Both of them outperformed this financial year as well. Of course, the auto pack is doing very well today, but I just want to take a technical check as well on PVR. Ajit, on the charts, looking at where it's currently trading, would you advise people who've been holding long positions here to book profits, or it's poised to go further?
So Navneet, today it has made a new record high and with volume, so which indicates that this uptrend, this positive momentum would continue. So, but yes, in case if you have bought it at lower levels, you may consider booking partial profit, because we may see some consolidation on the current levels, or it may witness some profit taking also. But in case if somebody bought it at the current levels, one should continue with the position. And now 1860 should be your stop loss. And since it's trading at the record high, the next area could be closer to around 2000 mark, where this stock may witness profit taking and consolidation.
Okay, very quickly, Hemen, do you also have a target on PVR?
Yes, I think so. We are at 1900. I would have a positional target of 2080.
2080. Okay, that's a positional target. Yogesh, before we thank you, your top pick for 2020.
Navneet, it will remain like there are 3-4 names in different sector, but IRCTC would be the one which I prefer. The other would be RITES, and the third one would be Reliance Nippon Asset Management.
You would prefer Reliance Nippon over HDFC AMC currently, Yogesh?
Yeah, Neeraj, because the valuation AUM wise, they are quoting at around 13 and a half times AUM, and HDFC is little on the higher side. So I'm on a safer side. I'm just going on a conservative way. I'm going to Reliance Nippon Asset Management.
Okay. Yogesh, we'll leave it at that. Thanks much for taking the time out and being with us.
Pleasure.
Well, the stocks have gone a bit quiet off late. Reliance Nippon Asset and HDFC AMC. Hemen, in your chart patterns, is this consolidation or is this weakness?
No, I think it's consolidation, especially if you look at HDFC AMC. We've had a phenomenal run. I don't think it can be sustained the way it did. And some of the mechanical indicators on the weekly chart have given a crossover sell. So what I mean to say is the move from 1400 to 3800 is over. And we're in a consolidation phase. This should ideally take a couple of months. Now HDFC and his group companies don't normally retrace as much as normal stocks do because of whatever. The undercurrent remains very strong. So, but yes, consolidation, and I think for 4 to 6 weeks they could still go up, go down, but not make new highs.
Okay. Pull up Indoco Remedies. We highlighted how Richard had given a buy call in the morning. Ajit, I want to come to you. If somebody bought this stock in the morning, would you advise them to book profit or they should just carry home their position?
Navneet, seeing the kind of rebound that we have seen from the bottom, it's advisable to book profit because we have multiple hurdles closer to around 195 to 200 levels, and it has almost tested that area today. So one should wait for a breakout above 200 to re-enter fresh, or in case if it again come down to around 180 to 175 zone.
Okay. Hemen, Navbharat Ventures, which has shot up 8 to 8.5%. Would you advise taking a position here at levels of 72?
Levels of 72. Yes, stop loss of 66, but yes, I believe that we've changed direction. But it's a positional call, not a short-term call. But yeah.
Okay, positional call. Navbharat Ventures, one can look to hold on here. Eicher Motors is up 3%. Ajit, very quickly, technical call on Eicher Motors.
Yeah, certainly, Navneet, as we are seeing, buying traction across the auto space. So 22,400 should be a stop loss area, and closer to around 23,400 to 500. That's the target.
Okay, well, autos seem to be doing well. They are finding favor from amongst traders and investors as well. Let's see if this momentum lasts. But we're ending in the marginally green for the Nifty 50. So it's been a day of consolidation, you would have to say. Very, very placid today. And no complaints really. The world has been a bit quiet. It's a thinly traded market. You'd rather have it not move too much. The Nifty Bank tour down about 54 odd points. The mid caps and the small caps did reasonably well though. 0.5% up for the Nifty small cap space, mid cap about 0.4%. So the broader markets did reasonably well, and market breadth, I'm sure, ended in the positive. Let me talk about the large caps first though, and what's moved and what's not. Tata Motors 4.5%, Eicher about 2.5%, Hero MotoCorp, Mahindra & Mahindra, Maruti, it's been autos. The top 10 names have 5 auto stocks, and then there is a Vedanta and a Z, for example. So not too much fundamental reasons there, but for autos which have gained a lot of flavor. Banks have taken a step back today. So Yes Bank, ICICI, SBI, Axis. There's also ICICI Bank in the red. So it's not been the best times for the banking stocks today. And then some other heavyweights included TCS as well as HUL and Infosys, actually even Bajaj Finance. So a bunch of quality names have gone back. NX Autos have given that stabilizing power to the indices today. But the broader markets, Navneet, how have they fared? The breadth is positive.
That's right, Neeraj. And in fact, there were a lot of pockets which stood out. There was buying interest seen in a couple of these themes today. And one being, we highlighted these dyes and dyes intermediate companies did pretty well. In fact, in the second half of the session, most of these companies witnessed buying interest. So something like Bodil Chemical, which was locked in upper circuit with gains of 20%. You also had Akshar Chemical, which shot up in trade, buying seen for this stock as well, and this too is closing with gains of 20%. Then there was Bhagadia Industries within the same segment. This one too shot up, and that's closing with gains of 15%. We spoke to the manager of Monte Carlo, a company which derives almost 50% of its revenue from North India. Remember, as a region that's been gripped with winter chill, and the company highlighted that they have gained this season vis-a-vis last season. Of course, even in this scenario of economic slowdown, the company is doing well. Ashok Leyland, we've been talking about how the auto stocks recovered in the last hour of trade. This one's closing at day's high. Then you had something like NCC, one of the top F&O gainers. This one was consistent, I guess, throughout the day, and finally closing with gains of about 4.3%. Metal stocks also shot up. Jindal Steel and Power was a technical buy call from Hemen's side, and this is closing at day's high level, which is viewed as a positive sign, at least in technical parlance. So 4% higher for JSPL. Bata India, both cash-based buying seen, and also on the future side, there were long bets seen for this counter, 2.5% higher for this one. While on the losing side, you had D-Mart, which was gaining, I guess, in the last 2 or 3 weeks, saw some profit booking maybe today. So this counter is closing a day's low mark with cuts of 2%. You had the PSU banking stocks moving higher on Friday, profit booking kicking in today. So you had PNB, which was down about 1%. You also had something like Bank of Baroda, which was down today. So profit booking kicking in there as well. And lastly, Cummins Industries was your top F&O loser today. That stock is closing with cuts of nearly 1 to 1.5%. But Nifty is closing in the green, 12,260. Even on closing basis, we've defended the mark of 12,250. And it's clear now, Neeraj, the range that we're looking at is something between 12,200 to 300.
Yeah, and let's see if that point of resistance, which is sustained, lasts or no. I'm interested in the volumes today. I wonder if we've nudged the 25,000 to 30,000 crore mark thereabouts. Yeah, just out there, 26,000. I don't think too much cause for a disappointment, considering this is expected.
I think every day it's just going down from 30 to 28 to today 26,500.
Maybe by end of the week we might actually start perking up again. But the F&O volume's reasonably okay, about 10 lakh crore mark. So that's not a cause for complaint. The contributors list would be interesting because we had the heavyweights correcting and autos gaining. Let's see if that's indeed how it's played out. Well, actually, yeah, except for Tata Motors, not too many auto names making their way out there in the gainers simply because of the low weightage. But look at the quality of names that have come off today, IT and banking.
Yep, and I guess Reliance recovered from the day's low, so that also contributed with regard to the recovery that we saw on the index. Lastly, just want to pull up the market breadth and see how the entire listed universe fared on National Stock Exchange. We started, of course, with advances taking over, but we are ending also with that, though there was some selling pressure in between the day. But finally, it is in favor of the advances. And lastly, India Wix, which closed at 7-month low on Friday, inched higher from those lower levels and closing around the levels of 10.89.
Well, how does this set us up for the next few days? Low volumes day, Ajit. How do you expect tomorrow or the rest of the week to shape up?
So, Neeraj, as we discussed in the beginning, that we are not anticipating any strong surge in the index. So, we continue to focus more on the stocks and the rotational buying, which we are seeing in the sectors. So, rather, in case if Nifty witnesses any further rebound later on, let's say 12,350 to 400 level, one should book profits and wait for any dip to re-enter. But at the same time, the stock-specific front, we are seeing almost all the sectors contributing to the move. The idea is to identify the right one at the right time and enter.
Okay, Hemen, what would be your last trade in the last trading day of the year?
I would write puts of either HPCL or IOC or ONGC because they've been floundering, they found bases and they're going to slowly claw up. So you'll have time erosion in your favor.
So you think they bottomed out?
Yeah.
The stocks will not fall from the current levels. You're advising to write puts of all these three companies and all the PSUs?
Yeah, all
as PSUs. The focus shifts to all the PSUs going into next year.
Yes, and it's a slow process. So I think as long as they hang around and slowly claw their way up, I mean, we'll have this time erosion giving us an advantage.
Okay, on that note, Hemen and Ajit, thank you so much for joining us today and taking us through your views in the markets, and wishing you both a very, very happy new year. And on that note, it's a wrap on this edition of Countdown. It's goodbye from Neeraj, my side, and the entire team who put this show together. Stay tuned, Market Wrap comes up next.